We're jumping straight into energy fuels today. Everyone is watching the price action. But the real story is a massive geopolitical supply shock colliding with a $12 billion government stockpile.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And hey, before we really get into it, make sure you hit that subscribe button, smash the like too. It helps us keep bringing you these simplified breakdowns.
All right, so let's set the table. It's early February 2026. If you've been watching the uranium space at all, you saw energy fuels just, well, it took a pretty big leap.
Oh, a massive day. February 9th, the stock shot up almost 9%, trading right around $23 a share. And what was interesting to me, the volume, it was a little lower than average, but the price action itself was just incredibly bullish.
Yeah, it's breaking out.
Totally.
Wow.
We're looking at a real move toward those 52-week highs, getting closer to that $28 mark.
And that $28, that's a psychological level as much as it is a technical one, right? But I always get a little skeptical, I guess, when I see a big breakout on low volume.
Sure.
It can mean there's not a lot of conviction there, or, it could mean the sellers are just gone, exhausted. But in this case, with the bigger picture, it feels like the market's finally waking up to what the actual asset is.
You mean it's not just trading the ticker anymore?
Exactly. It's trading the hardware.
That's the perfect way to put it. You really can't talk about energy fuels without talking about their crown jewel. It sounds a bit dramatic, but in mining, hard assets are everything.
Yeah.
We're talking about the White Mesa Mill in Utah.
And I think a lot of people just gloss over that. They see mill on a line item and think, okay, it's a factory, whatever.
Right.
But it's so hard to overstate how critical that one facility is. It's not just a building. It's a permission slip to print money, potentially.
Let's put it this way. It is the only, and I mean the only, operating conventional uranium-vanadium mill in the entire United States.
That is the literal definition of a moat. In the tech world, we talk about network effects, In mining, the moat is purely regulatory.
Think about it. Just think about the barrier to entry. If you wanted to build a competitor to White Mesa today, you're not just looking at the price of steel.
Oh, God, no.
You're looking at 10, maybe 15 years of just permitting hell. The EPA, state regs, nuclear commissions. It's a complete bureaucratic nightmare.
And that's the so what, isn't it? Energy Fuels doesn't just have a mill. They have a license to operate that is almost impossible to replicate. So while their competitors are stuck with these supply chains that stretch across oceans to, questionable places.
Places that might not be so friendly to the U.S. next week.
Exactly. Energy Fuels can process everything right here at home.
In this climate, that's everything. It's not about cheapest anymore. It's about safest. It's about secure. And this gives them this incredible vertical integration. They control it all on U.S. soil.
It's a supply chain fortress.
It is. It just insulates them from so much of the global chaos. And we're finally seeing that advantage show up on the P&L. For so long, this was a story stock. One day, this mill will be valuable.
And now that day is here. The financial ramp-up we're seeing is... well, it's startling.
Startling is one way to put it. Get this. The most recent quarter, revenue hit $17.71 million. Now, okay, in the grand scheme of things, $17 million is tiny. But for this company, that's a 337% increase year over year.
337%. That's like a tech startup's growth, but in a heavy, old-school industrial sector.
And they didn't just beat the street's estimates, they obliterated them by nearly 80%. And if you zoom out, the trailing 12 months, revenue's up over 100% to about $79 million.
Okay, so the machine is working, the revenue is coming in, but let me play devil's advocate for a second.
Please.
Revenue spikes in mining can be temporary, one-off sales, that kind of thing. So why is the market valuing this domestic capacity so highly right now? What changed?
Because the macro tailwinds just turned into a hurricane. It's a perfect storm. And catalyst number one, the big one, is what's happening in Kazakhstan.
Ah, the slow-motion shock.
That's the one. Kazakhstan is basically the Saudi Arabia of uranium. They're the heavyweight champ. But we're seeing their output peak. It's stalling.
All the easy stuff has been mined.
Right, and this is just basic economics. You have this huge chunk of global supply that's starting to plateau, maybe even dip at the exact moment global demand for nuclear is going through the roof.
Sure.
AI data centers, EVs.
Everyone needs base load power.
Supply gets squeezed, demand rises, and that hands a massive win to U.S. producers who can actually deliver. If you're a U.S. utility, are you going to rely on a shaky supply chain in Central Asia or buy from the guy in Utah?
You buy from the guy in Utah, but that's just the commercial part, the political side. That's where the real money is.
Catalyst number 2.
Yeah.
Project Vault.
The government initiative. I feel like everyone's whispering about this, but nobody really gets what it is.
So, simply put, it's a $12 billion government plan to build a stockpile of critical minerals. The U.S. finally admitted that, hey, maybe relying on our adversaries for the stuff that runs our grid is a bad idea.
12 billion is a serious number. That's not a grant program. That's a market-moving amount of capital. But the key is, the government doesn't just want raw ore. They need processed material.
Exactly. And who has the mill?
Energy fuels.
They are perfectly positioned. It basically puts a price floor under their product. Oh, wait, there's more. The third catalyst might be the biggest one long term.
You're talking rare earths. Our use.
Yep. Energy fuels isn't just a uranium play anymore. They are moving hard into rare earth elements. Neodymium, praseodymium, all the stuff you need for high-performance magnets.
The magnets in EVs, wind turbines, fighter jets.
Crucially, defense systems. And for decades, China has had a complete stranglehold on that market. I think they process something like 80 or 90% of the world's rare earth.
It's a monopoly.
So when Energy Fuels steps up to counter that, it's not just a business move. It's a national security play. You're not just buying a mining company. You're betting on American energy independence.
That is a powerful, powerful narrative. You have the supply shock from Kazakhstan, the government money cannon with Project Vault, and the strategic pivot into rare earths. It all explains why people are looking at that $27, $28 range.
So the nuclear supercycle meeting the critical mineral strategy. It's a heck of a bull case.
It absolutely is, but I think we need to pump the brakes a little.
Okay.
We're not just here to cheerlead. Let's look at the flip side. Let's take off the rose-colored glasses, because for all that revenue growth you mentioned, there are some pretty ugly numbers in the financials.
You're going straight for profitability.
I am. Revenue up 337%. Great headline. Are they making any money? No. In fact, they're bleeding it.
That is a fair point. If you look at trailing 12-month net income, it is negative $97.7 million. That's almost $100 million gone.
$100 million out the door. For a company this size, that burn rate is, frankly, terrifying.
It is, but you have to contextualize it, right? This isn't software. They're digging giant holes in the ground. They're in a heavy, heavy investment phase, developing mines, ramping up the mill. It costs a fortune up front.
The classic miner's dilemma: spend millions to make millions, but in the meantime, your balance sheet looks awful. And my other concern is the consistency of that revenue.
Ah, the lumpiness.
Lumpy is a very kind way to put it. It's not a subscription model. They sell a batch, they get paid. They don't.
You're dead on. In fact, consensus estimates are actually projecting that for this current fiscal year, revenue is going to drop by about 28%, down to around $56 million.
Wow, that's a huge swing.
Right.
If you're a growth investor, you see plus 300% one year, then minus 28% the next. That kind of whiplash will shake anyone out.
It will. Now, the projection is for a huge rebound the year after, but that dip is going to scare some people. If you need a smooth line on a chart, this is not your stock.
And speaking of shaking people out, we have to talk about who is selling right now, because it's not just nervous retail traders.
The insiders. Yeah, this is the red flag that always makes me lean into the screen. Over the last 90 days, about $6.94 million worth of shares sold by insiders.
Including the CEO, right?
Including the CEO. And look, the standard line is, oh, people sell for lots of reasons, buying a house, paying taxes, whatever. But when the guys running the ship are dumping almost $7 million in stock as the price is climbing.
You have to wonder, do they know something we don't? Do they think the valuation's getting a little frothy?
It's a fair question. Is this panic or just profit-taking? It doesn't look great.
Not at all.
But here's the counterpoint.
Right.
While the insiders are selling, the institutional ownership, the big money, is holding rock steady.
They're sitting at what, 48%?
Yeah, 48%. So the big funds, the asset managers, they aren't spooked. They seem to be looking at the 5-year picture, not the 5-day chart.
And volatility is the key word there.
Yeah.
We have to talk about the beta, because this is not a stock for your grandma.
Not unless she likes roller coasters. The beta is 1.68, which, for anyone who doesn't track that, let's just translate it.
Yeah, please do.
The market as a whole has a beta of 1. Energy Fuels at 1.68 basically acts like a leveraged play on the market and its sector.
So when the market has a bad day, Energy Fuels could have a terrible day.
Exactly. If the sector sneezes, this stock gets pneumonia. We saw it with the rare earth sell-offs recently. One bad news report, the whole sector dips, and energy fuels swings hard. It's a speedboat, not a cruise ship. You feel every single wave.
So just to reset here, we've got this company with a massive, unique asset, huge government tailwinds, but it's also burning cash, has lumpy revenue, and the CEO is selling. It's a really complex picture.
It is. It is not a simple story. So if you're watching this name, what are the signals? What should you be looking for in the next few weeks to cut through all this noise?
Okay, there are some dates you need to mark down.
Get your calendar. February 25th, 2026.
Earnings day.
The next big test. Now, expectations are pretty low. The consensus is for a loss of about 7 cents per share.
But they have a history of beating, don't they? Like you said, they crushed revenue last time.
They do. And that's what to watch for. If they come in with a smaller loss or, shock everyone with a break-even quarter, that would be a huge catalyst. But I'm watching the top line, the revenue number. We're looking for something around 27 million.
If they hit that, it shows the ramp-up is real. But earnings are backward-looking. What about forward-looking triggers?
Number one is policy news. We keep talking about Project Vault. We need to see something concrete.
Right now, it's just a promise. We need to see the purchase orders.
You need the ink to be dry. An actual spending announcement. If the government says we are releasing the first $1 billion to buy X and Energy Fuels is on that list, the stock moves instantly. That turns potential revenue into guaranteed revenue.
Okay, what's the second trigger?
The commodity price itself, the uranium spot price. You should have that on a chart. As Kazakhstan tightens up, that spot price should, in theory, spike.
And because Energy Fuels has the mill and exposure to spot prices, any spike goes straight to their bottom line. It's pure margin upside.
Directly.
Huh.
And the third thing is just keep an ear to the ground for news out of the White Mesa mill.
The boring operational stuff that actually matters.
Exactly. Is the ramp-up smooth?
Yeah.
Are they hitting targets? Any news about exceeding production is rocket fuel. Any news about delays is a major headwind.
So it's a trifecta. Watch the policy, watch the commodity price, and watch the execution.
You get all three of those to line up, and you see that breakout past 28.
This whole thing really highlights a major shift. It used to be all about globalization. Who can make it the cheapest anywhere in the world? Nobody cared.
Right, and now it's all about national security. Who can make it here, even if it costs more? We're going from just-in-time supply chains to just-in-case stockpiles.
It's a fundamental change. You're now paying a premium not for efficiency, but for resilience.
Which brings us right to the lowdown on Energy Fuels.
So, sum it all up for us. What's the final verdict?
Here's the bottom line. Energy Fuels is a high-risk, high-reward bet on American energy independence. They have the hardware, the one-of-a-kind mill, they have the software, all the government support. But, and this is a big but, they have to prove they can turn all that into actual profit. They have to stop burning cash and start printing it.
It's the moment they have to transition from being a story stock to a real profitable business.
That's it. You're betting the geopolitical situation forces America's hand. You're betting the government literally can't afford to let them fail.
Which leaves a final thought for everyone listening. As you look at your own portfolio, you have to ask yourself this question. We are moving from an era of efficiency to an era of resilience.
I like that. That's good phrasing.
So is that national security premium worth paying? Are you willing to take on the volatility, that huge beta and the cash burn of a company like this? Because it's basically the only insurance policy the U.S. has for its nuclear supply chain.
Is the safety of the chain worth the risk on the balance sheet? That's the question.
Something to think about.
That's the lowdown. Keep your eyes on the tape.
Thanks for tuning in, everyone. We'll catch you on the next one.